Let's start with something that might make you uncomfortable. Most people believe markets are chaotic. They think prices move because of sentiment or news or supply and demand. That's the story you're told. But real markets don't move randomly. They move when power shifts hands. And right now in the silver market, power has quietly consolidated into the hands of one institution, one bank, jpmorgan. Not a government, not a central bank, not a cartel of miners. One private bank now controls more physical silver than the COMEX, more than most countries, and more than any entity in modern history. And while this was happening, while this position was being built over 15 years, you were told silver was boring. Dead money, a bad investment. They were buying. You were distracted. And now something critical has changed. JP Morgan is no longer betting against silver. They are betting everything on silver going higher. This is the moment most people miss. Welcome to the real story. Let me show you where this becomes undeniable. In 2020, JP Morgan paid $920 million, the largest fine in history for precious metals manipulation. That's not an accusation. That's a legal fact. They were caught spoofing silver and gold markets, placing fake orders to move prices, then canceling them before they could be executed. Almost $1 billion in penalties. Now here's the part nobody talks about. After the fine, they didn't exit silver. They didn't reduce their exposure. They didn't learn their lesson. They kept the metal. They kept buying. And they kept accumulating physical silver while the public assumed the story was over. The fine closed the case. It didn't undo the position. To understand what JP Morgan did, you have to go back to 2008, the financial crisis. Bear Stearns collapses. And buried inside Bear Stearns was one of the largest short positions in silver ever created. Massive bets that silver prices would fall. When Bear Stearns failed, someone had to absorb those positions. JP Morgan stepped in. They didn't just acquire a failing bank. They inherited a time bomb in the silver market. Most institutions would have rushed to unwind it. JP Morgan did the opposite. They kept the short position and used it for years. They suppressed the price through paper contracts while quietly accumulating physical silver off-market. Two hands, two strategies. One pushes the price down. The other accumulates the actual asset. This is not speculation. This is documented behavior, and it went on for 15 years. Let's talk scale, because the numbers change everything. In 2012, JP Morgan held less than 5 million ounces of silver. By 2015, that number was 50 million ounces. By 2019, 150 million ounces. Fast forward to 2024, it's 500 million ounces. And by early 2026, it's projected to be around 750 million ounces. Let that number sink in. Global silver mine production per year is about 830 million ounces. JP Morgan controls almost one full year of global supply. The COMEX, the exchange that supposedly sets silver prices, has about 30 to 35 million ounces available for delivery. JP Morgan holds more than 20 times that amount. This is not a market participant. This is a market anchor. They don't follow the price, they create it. Here's the most important part, the part most people don't understand. Between mid-2025 and late 2025, JP Morgan closed its entire short position. Over 200 million ounces worth of bearish bets gone. For the first time ever, JP Morgan is net long silver. Think about what that means. For 15 years, low prices helped them accumulate cheaply. Now, the accumulation phase is over. Now price appreciation benefits them directly. Every single dollar that silver rises, JP Morgan gains roughly $750 million. Not annually, per dollar. This is not a hedge against inflation. This is a conviction trade on a massive scale. The game has changed, and they've signaled their next move. Some of you are already thinking it. What about the Hunt brothers? Didn't they try to corner the silver market and fail spectacularly? Yes, and that comparison actually proves why this time is so different. The Hunts used leverage. They bought on margin. They were vulnerable to rule changes and margin calls. JP Morgan, on the other hand, owns the physical metal outright. It's stored in their vaults. There are no margin calls. There's no forced liquidation. You can't change the rules to confiscate metal that's already sitting in vaults. And the scale? At their peak, the Hunts had about 200 million ounces. JP Morgan has nearly 4 times that amount. This isn't a leveraged bet. It's a physical takeover. Now zoom out. Silver trades in 2 distinct markets, the paper market, futures, ETFs, and contracts, and the physical market, which is real metal you can hold. Right now, the paper market claims roughly 20 to 25 ounces of silver for every single ounce that actually exists for delivery. That system works until people start asking for delivery. And that's exactly what's happening. In early January alone, tens of millions of ounces were withdrawn from COMEX vaults. On one specific delivery day, JP Morgan supplied almost all the silver that was delivered. Everyone else, they had barely anything. Why? Because they don't have it. When trust in paper promises fades, the market doesn't gradually adjust, it snaps. Now, let's layer in the global picture. China now treats silver as a strategic material. Exports are restricted. Approvals are required. Why would they do that? Because China consumes enormous amounts of silver internally for solar panels, electric vehicles, electronics, and data centers. They aren't restricting exports to manipulate markets. They're doing it because they need the metal for their own industrial growth. So now look at the setup. In the West, jpmorgan controls the largest private silver hoard in history. In the East, China is tightening the supply. And globally, industrial demand is absolutely exploding. This is a structural squeeze. It's not hype, it's not sentiment, it's structure. Silver is not just money, it's infrastructure. For solar panels, there's no substitute. Electric vehicles are using more and more silver. Every 5G tower needs it. And AI data centers require massive amounts of silver-rich circuitry. Demand is accelerating. At the exact same time, supply is being constrained. And here comes the killer detail. 70 to 80% of silver is a byproduct of mining other metals like copper, lead, and zinc. You can't just turn on more silver production when the price goes up. Even at high prices, supply responds slowly. It takes years, not months. jpmorgan understands this. That's why they spent 15 years accumulating first and flipped their position later. This is where it gets personal. Wealth transfers don't announce themselves on the evening news. They happen quietly, while most people are focused on something else. Think about real estate in the 2000s or tech stocks in the 2010s. Now it's about strategic commodities. You don't need to panic. You don't need to go all in on anything. But you do need to see reality clearly. Paper prices are narratives. Physical ownership is power. When systems strain, the question becomes very simple. Do you hold a claim on something or do you hold the thing itself? Let's end with this final thought. jpmorgan didn't wake up one day and decide to buy 750 million ounces of silver. They thought in decades. They acted in silence. And they positioned themselves long before the crowd understood the game being played. Now, the switch has flipped. And history shows us that this part of the story never lasts quietly. So ask yourself, 10 years from now, will you say, I saw it coming and paid attention? Or will you say, I saw it coming and did nothing? If this video helped you see what's actually happening behind the curtain, hit the like button. It tells the algorithm that this information matters. Comment, wake up below if you're done trusting the surface level prices. And share this with one person who still thinks silver is just a commodity. Because when power consolidates this much, awareness is the only advantage you have left. Stay sharp.